Hello, and welcome to this annual update on the Baillie Gifford UK Growth Trust. My name is Iain McCombie, and I co-manage this investment trust alongside my colleague Milena Mileva. The UK Growth Trust is a concentrated, long-term, actively managed investment trust consisting of a portfolio of what Milena and I consider to be some of the best British growth businesses. What does this mean in practice? We aim to identify high-quality companies that enjoy sustainable, competitive and cultural advantages, and therefore have the potential to deliver superior earnings growth over many years. We then hold on to them long enough for their unique strengths to emerge as the dominant influences on share prices. The past few years have been challenging for growth investors, particularly 2022. Why? Top-down macroeconomic factors such as higher inflation, rising interest rates, and geopolitics have all been critical in driving share prices, and this has been at odds with our style of investing. The board rightly asked us to thoroughly review our long-term performance. Whilst the main reason for underperformance has been driven by our growth style being out of favour, some of our stock picks haven't worked either. However, mistakes are a fact of life for investors, and importantly, the frequency of them hasn't changed. Regardless of performance outcomes, we continually strive to become better investors and seek to ensure that the inputs we use to help inform our investment decisions are as robust as possible. One example of a recent process enhancement has been our decision to carry out in-depth site visits to help test our levels of conviction. Reflecting on the most recent 12-month period to the end of April 2024, performance has lagged the broader index. St James's Place was a key detractor. The wealth manager experienced an unexpected charge against profits, which led to a lurch down in the share price. We have spent a lot of time engaging with the management team on this and the broader regulatory environment. Whilst there is a lot of uncertainty there at the moment, the valuation may be capturing that. Elsewhere, concerns about the health of the Chinese economy impacted the shares in Genus, Prudential, and to some extent Burberry. While painful in the short term, we believe there remains a long-term growth investment case for these companies, and we are patiently sticking with them. On the positives, Auto Trader delivered excellent operational results, which was reflected in the share price. The online car marketplace attracted a record number of consumers to its platform, meaning that it is now 10 times larger than its nearest classified competitor. It has continued to make good progress with the rollout of its new transaction product, Deal Builder. This is encouraging as we expect the adoption of this product to help significantly expand the company's addressable market over the long term. Lastly, Wave, currently our sole unlisted investment, performed very well. The value of the autonomous driving technology business increased substantially following its latest funding round, in which a significant sum of new investment was raised at a higher valuation. In terms of activity, portfolio turnover remained very low at only 5%, so we have definitely not been churning the portfolio. Why not? We remain convinced that the companies we own are undervalued. Therefore, we have been leaning into share price weakness, especially in cases where there's been short-term cyclical issues. Great examples here would include Kainos, Genus, and AJ Bell, which have strong long-term fundamentals. However, cyclical issues have somehow obscured their long-term earnings power. So we've been adding to those. We also took a new holding in the online card retailer Moonpig. It has a fantastic competitive position with a 70% market share in the growing online greetings card market and a large base of potentially very valuable customers. It is investing a lot in data science, and we think this should hopefully drive significant value creation from its large existing customer base. We continue to see an abundance of significant and unrecognised potential in the portfolio. We see it in long-standing holdings like Autotrader, Experian and Ashted, which have been working successfully to expand their already substantial market opportunities and are embedding themselves ever more deeply into their customers' businesses. We also see it in long-standing holdings such as Renishaw and Genus, whose unwavering commitment to research and development spending we believe will yield significant results in the coming decade by enabling manufacturers and farmers across the globe to solve some of their most pressing productivity and sustainability challenges. Overall, despite the tough few years, and we do appreciate that we've tried fellow shareholders' patience, we really believe in the portfolio and are excited by its future growth potential.